Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. This is Aaron Edwards, Santos Springs, March 10th, 2026. Man, 10 days ago we had the war break out in the Middle East, and then over the weekend we had really volatile trade on the Sunday night overnight trade. A lot of selling pressure on Monday, just volatile markets, and here we are. USDA report, a lot going on. We're gonna cover it. We're gonna go over where we should be at on our sales from as far as what work we need to get done this week. There might be some catch-up work for some folks, but let's start with the recommendations and then we will transition to the analysis after that. So let me go ahead and share the screen here. Okay, so here's the work that we're gonna get done. Recommendations. We're gonna sell another 15% of new crop corn. I recommend using an HTA. We don't want to lock in basis yet. Many times we get better basis down the road. If you've been following the recommendations, you should be at 25% priced, not on your total production for 2026, but on the bushels that are in your portfolio on forward pricing. So whatever the bushels are that you're going to forward price, we want to get a quarter of those done. That's where you should be. And here's the, I'll go over this 3 times for the 3 recommendations. Should I do it before or after the report? I wish I had a crystal ball. Take the coin out of your pocket, throw it up, heads, maybe markets go up, maybe they go down. From a risk management standpoint, this is how I recommend execution. If you are caught up, if you have already made those past sales and the only sales you need to make are the additional recommendations from this week, I would just straddle the report. Do half the volume before the report and half the volume after the report, if you are caught up. If you are not caught up on your sales, let's just take this corn example. Let's say that you haven't booked any new crop corn yet. If you are not caught up, I would do your play catch up before the report and then lock in the recommendations for this week after the report. So just for the sake of perspective, right? Let's say that you are, you haven't sold any new crop corn. On this example, if you haven't sold any new crop corn, we're recommending 15% this week, and we've already recommended in the past 10%. So if you have not sold any corn, do 10% before the report, 15% after. Again, not production, but forward price bushels. If you are caught up, and you've already done the 10% when it was recommended, and you just have 15% to go, do part of that before and part of that after the report. Next line, We're going to sell 20% of quarter two soybeans. So we're making progress on our spring bushels. That would get us up to 40% priced on spring bushels. Again, if you are on pace, then straddle the report a little bit before, a little after. If you are not caught up on sales, then do the past recommendations before the report and this week's recommendations afterwards. And then the final thing is we're going to sell an additional 10% of new crop soybeans. And let me get that looking a little bit better. An additional 10% of new crop soybeans. That's giving me grief. 10% of new crop soybeans. And that should get us up to 60% priced on new crop soybeans. Not production, just the bushels that we're willing to forward price. So that's that. And then now let's shift gears to we've been tracking this ratio during the battle for acres. First thing that I want to point out, and I'll actually do this in blue, man, this ratio has stayed very close. This ratio has stayed very close to that 2.4. So we're not seeing corn or beans. We're not really seeing one market gaining on the other. They're tracking pretty well together, pretty close to that ratio. We're not seeing one market pulling away from the other. That is very interesting to me. So basically they're neck and neck here on this battle for acres. And as we look at, we've seen prices rise. So let's focus here on soybeans. If we assume this $11.40 price for soybeans, which is new crop beans, then the ratio that would put us within the realm of normal. At one extreme, we could have a ratio of 2.3. That's the soybeans divided by the corn, that ratio, new crop. That would give us a $4.96 price for corn. And at the other extreme, if it goes to 2.7 on that ratio, that would give us a $4.22. So that's kind of the range that we're looking at on corn. Given this price of soybeans stay at $11.40, that's the range that we could look at as being still normal without really skewing acreage one way or another. So there's a pretty big range. I do think it's important to note that we're closer to that $4.96 than we are to the $4.22. So at this price of soybeans, we're pushing up against the boundary of the potential new crop corn price to some extent. And then if we flip the script a little bit and we say, okay, let's hold corn constant. What's the range we could see on beans? Well, at 2.3, we could see beans falling all the way down to 10.93. But there's a lot of room on the upside, which could take us all the way to 12.83 at this 4.70 price of corn. So we could have new crop beans, which are currently at 11.40, and the best they've been really, 11.20, 11.30, 11.40. That's about as good as they've been. Man, talk about 12.50, 12.60, 12.83 new crop beans. There's a big cap there. There's a big upside potential on that bean market within this ratio. The point that I think is interesting about that, and I've mentioned this, and as long as this ratio continues around that 2.4, I think this will likely continue being true. But we really need to see this price of soybeans going up in order to see the potential price of corn also going up, right? We really need to see, if we're going to do it in colors, that might be a little bit easier. If we say beans are green, man, we need beans to go up in order to lift the ceiling on corn so corn can keep going up. If beans are going to stay under pressure and that ratio is going to hold, we're pushing up against some, there's a lot of weight on top of this market unless we can get beans to continue drifting higher, which brings us to jump into the analysis part. So let's shift gears here. As we look at this chart, if you wanted, a lot of times, we look at non-ag related charts. Man, this just absolutely tells the story of what we've seen out of trade. Look at this. We see bombs starting to go off. The market gets all jittery. And then this is that overnight trade, Sunday night overnight trade. That's what threw all markets basically into a frenzy. what's going to happen to the price of oil? That threw everything into frenzy. And then now it's down here. If we zoom in on it, you can see it's pretty tame down in here at this green. Let me get a smaller, this spot here, this green. It's pretty tame, but it's also not rolling over. So very, just that volatility up and down. And if you just kind of picture this shape, you're going to see that in essence, that's what happened across all of these markets. So let's shift gears. We're going to start with soybeans and we're going to go to corn. And we could just remember that basic shape from the oil market because we're going to see that again. Before we look at the price of soybeans, let's just look at what the funds have been doing. We saw here at the beginning of the year, they were moving towards net neutral. But then we got speculators excited and they have, this is what, the fourth week in a row that we've had significant buying pressure. And we've also gotten over that hurdle at this price level. This is where we are overbought. It's over. It's bonus, right? This is speculative pressure that's really pushed this bean market up. Can it go higher? Absolutely. We can keep beans going, but I always like to think if speculators left the market, if this market were left to its own devices of just buyers and sellers, what would happen? So if these speculators were to leave their position, prices would very likely fall, and they could fall pretty hard. So we have this overbought position by the speculators. If they step out of the market, chances are soybeans are dropping. As we think about that, let's just look at where we're at in the soybean market right now. If you've been following along, we got real aggressive here on soybean sales. Well, it wasn't even that low, but it was real aggressive on soybean sales around this point here in late November. And we did some catch-up work here. If you hadn't gotten your November sales done, we're there. Now, we got this big bar on Monday back down. Now's where we're getting some additional work done, right? In here, we're getting some additional new crop. Well, this is the May contract, but we're getting some additional work done. We put in new highs and we're getting a little bit more work done. But you can basically see that pattern, right? This huge spike up here in the overnight trade on Sunday, and then it's a little softer, just exactly the same way oil was. And as we look at new crop, it's this very similar. This big spike up following oil on the way up in the overnight trade on Monday. Then it's already, by the end of the session, was already down at the bottom. And then here we are, trading a little softer. So what's the direction? That's the big question. Here's the bullish bit. We stay above that 20-day moving average, and we finally get an actual $12 new crop or something really exciting, right? We get that last leg up. Possible, absolutely possible. We've got more sales to make, but we have been pretty aggressive in this price range on getting a lot of work done on soybeans. Why I'm a little bit hesitant about that is because you really do need to feed the bulls. So if we get a bullish report, yes, we could go up. But if you look at the bearish side, and if oil keeps going up, beans are probably going to follow, right? But if you look at the bearish side of the ledger, if you think of the bearish items, there's a case to be made that a third of Brazil's soybean crop needs to be priced within the next 7-8 weeks. There's also a very large overbought speculative position. So if speculators start selling or farmers in Brazil start selling, we could have a pretty big correction to the downside. I hope that doesn't happen, but let's say we fall 20 cents and then we're below this 20-day moving average, and then the next support line is down in here at around 1080, 11. So we could lose anywhere from, I would say 20 to 50 cents we could lose on the soybean market pretty quick. And that doesn't hamper our perspective for good spring rally. we still have to get a crop in. We still got to raise a crop. So there's still plenty of upside potential. But as we look shorter term, will we be able to continue feeding these bulls higher? I hope so. But, we've been making strategic sales in here, and I do believe it makes sense from a risk management standpoint. Now shifting gears to the corn market. Let me grab the marker here on the corn market. We finally have the speculators in the corn market getting net long. Finally. Man, we have waited a long time to get that. Really, ever since that January report that was a doozy, we've struggled to get those speculators net long. Finally, we have speculators in a long position. What do we do with that? Number one, I'm excited speculators want to be long. It makes sense ahead of spring growing. We've got the world being very uncertain. Typically you want food. But as just think of the speculators, they're long, but not a very big long position, because that's going to play in as we think about the corn market, because to some extent, I'm a little bit more optimistic about the corn market. If you want to think technically, this is May corn. Again, we had that crazy, where's my marker? There we go. We had that crazy overnight trade on Sunday following oil. It backed off, was selling pressure on Monday. It backed off, and it makes sense that there would be pressure selling into that. Crazy overnight trade, backed off on Monday. We have a gap lower. There's the gap right there. But where's corn going now? Well, just think about it this way. This is the 20-day moving average coming up. This is the 200-day. Technically, this is a pretty supported area, and we've got speculators net long. So speculators are saying, I think this is a pretty stable buy. And if they're willing to be long here, are they really going to jump ship and sell this thing off? I think it's more likely that this corn market finds buying pressure in here. That doesn't necessarily mean we go up to the moon. I hope we do. I hope we get that $5 mark. But if there is stable buying at these price levels, that is a good sign. And then you'd say, okay, but you're recommending corn sales. Well, let's look at new crop corn, because that's a little different story, right? We started selling new crop corn here on the way up. If you've been following, we got in here. This was a price where pretty close to the highest we had been recently. We sold, and then look at what happened. Wow, this thing just absolutely went to the moon, got close to $5 on new crop. Sure, it's sold off, but you're still, even at this price level, that's still about the best price since almost a year ago, right? So it's still a solid price to get some work done. And we're just chipping away at it, right? Just making solid pricing moves. So let me go ahead. We're going to wrap up with our summary of markets and go from there. Let me know if you have any questions. We can answer those. So let me go ahead and share the screen here for us to just do our summary. So as we look at the price in Chicago, seasonally, it is a sell for corn. Seasonally, it is neither a buy or a sell for soybeans. Managed money, they're long, but they are not long enough to be overbought. In soybeans, they are overbought, which says, hey, if they're overbought, we want to be sellers of soybeans from a managed money standpoint. And then the trend for corn is up, and the trend for beans is up. Basis levels are stable. The trend of basis levels historically would continue to improve. What might throw a wrench in the gears is possible volatility on the backside of today's report. Technicals hold little weight as they're caught between major geopolitical headlines and fundamental unknowns with the numbers that will be published by the USDA later today. Basically, we could do all the technical analysis we want. Whatever's going on geopolitically and whatever's going on with the report today, those are going to be the drivers of prices more than any technical analysis, in my opinion, at this time. So once we get the numbers from the USDA, once we get some headlines stabilized and we feel like we have an idea of what oil's going to do, then yeah, we can look at some technicals. We can talk about what could happen in these markets. One really good piece of news, in my opinion, about that spike in the overnight trade on Sunday night is now we have that the top of that market. So it's almost like a high water mark. Now we have that we can go back to. And a lot of times those technicals, you got that high, so there's people with orders out there, or they have their eyes set on the peak of the market. And if we get some hiccups in the spring, maybe that gives us an opportunity to go back up there, right? So it's good that we had that rally. Hopefully we can keep going up shorter term. But the caveat, or just the pause for me, is if we want to see corn to continue to climb higher, based on that ratio, we need to see beans going. And then on the bean market, speculators are already overbought, and we likely will have some selling pressure out of South America. So we need whatever fundamentals we get on the report today, plus whatever headlines, if RVOs get approved or anything like that, plus whatever geopolitical risk. We need to keep feeding those bulls enough to make sure that speculators don't leave the market, hopefully keep buying, and enough to compensate whatever selling pressure we will be getting out of South America. So it's not that the bears are going to win. Maybe we keep going higher and higher on beans. And if beans go higher, I think they'll pull corn. We've seen that. Beans go up, corn comes up. But we need to keep feeding those bulls, especially in the bean market, or else I'm afraid attrition and selling pressure is going to cause a bit of a correction to the downside in soybeans. And that'll, even if it doesn't knock corn down, it'll be a little bit of a damper there. So a lot going on. Strap in, get ready for the report, and let me know if you have any questions.